A new week, a new month, and after big tech earnings, investors are asking one question: what's next for the AI trade? Joining me now is Paul Meeks, Managing Director and Head of Technology Research at Freedom Capital Markets. Paul, welcome to the show. So great to have you.
Good to see you, Caroline. Thanks for having me.
All right, so we are looking at green arrows this morning. What do you think? Has the correction in tech run its course, or do investors need to brace for another leg lower?
Caroline, I think we're mostly out of the woods. We do have a couple of important quarterly earnings coming up even this week, particularly AMD. But I was actually surprised that despite pretty strong fundamentals with the AI infrastructure builders, and most of them have reported their quarters, and most of them have not only reiterated guidance, but raised guidance. So all is well, but what we have in this space over the last couple of years, ever since the development of ChatGPT in late 2022, is we swing as a group of investors from the pessimist reign to the optimist reign. And so I expect that over time, people will come back to these names. As far as can we immediately bounce back and can we sustain that bounce? Boy, I wish I knew that.
So now that we've heard from big tech, aside from Nvidia, rank your top 3 Meg 7 stocks today, Paul.
I would say today, I'm a contrarian investor. I think over time, Meta will indeed monetize its AI in one shape or form. I mean, this is a company that in the history of global business, perhaps no other company has monetized products better. And so I think with the bludgeoning, which this stock got when it reported its earnings, I'm probably most bullish as a contrarian on Meta. I also like what Google has to say and what Amazon has to say. The stocks have run up a little bit, and maybe even Microsoft with its comeback. But I would say my number one is probably Meta as a contrarian investor for the long term.
What's number 7?
Oh, wow. Tesla. I think Tesla is in very deep trouble. And if you're a SpaceX shareholder, if you like it or not, you will be forced to own Tesla. And one of the things that, despite the fact that Elon Musk is a genius, he does bury poorly performing assets into better assets. And so what we saw with Tesla recently is the EV business is not necessarily in decline as far as the number of units. The volumes were actually pretty good last quarter, but the profitability and the cash flow was nasty. And this is when these companies have to spend even more on their own capital expenditures. And so I think Tesla shareholders, that stock can go down more. I think SpaceX, even though it's down a lot from the IPO, could go down more. And so those would be the number one on my hate list.
We will hear from SpaceX this week with its first earnings report. Is there anything that Elon Musk could say that would make you bullish on SpaceX, or is that just going to be a stay away for now?
Well, for me, it's a stay away from now because I'm looking at the fundamentals. But we all know whether it's Tesla or SpaceX or any company that he's involved in, it's more of a cult than a fundamental story. And I actually believe with the stock coming down so steeply from its peak right after the IPO, given the fact that he'll sprinkle his fairy dust on it, I bet the stock rallies. But I actually think SpaceX is probably worth $60 to $70 a share. So that tells you, even from this low price, that I think it could be cut in half again. But he will talk about the wonderful things in the future. I bet the stock actually rallies in the short term.
Okay, it's rallying today. It's trading around $112 a share, so still well off that IPO price. We haven't talked about Apple yet. We're kind of seeing a sea of green today in tech, but Apple is not participating. It's down only about 1% today, and I know you've been skeptical of Apple's AI strategy. So what does Apple have to prove before you'd become more bullish there?
We've all been waiting. Well, I haven't been bullish on the stock in quite a while. I bought it years ago and just hold it because I also know it's not going to go down. We're all waiting for show me what you got in AI, right? The monetization. Now, it looks to me like, they are going to lever this trend through their iPhones and, good for them, bad for them because they don't have to spend the R&D, they don't have to spend the capital expenditures on compute, but on the other hand, they also lose control. And if all of their functionality is being delivered by somebody else's R&D team, at some point, that side is going to demand all the economics. And I think Apple will be in some trouble. Now, they start the beginning of every day with over 1 billion units, right? They have a very large installed base that'll carry them for a while. But if you ever get a whiff that there is another device in addition to your iPhone that can bring you AI in the future and they lose their walled garden status, that would be a lot of hell to pay. In the meantime, their last quarter, the services business was disappointing. And the services business is where you need to see them grow because that's the higher margin business. The iPhone business, always about 50 to 60% of revenues will wax and wane depending on product releases. But here's a company that gets a enormous valuation even after the correction. And for many years, not recently, but for many years, it's grown its top line and its bottom line at a much slower rate than just the S&P 500. So
Okay,
I just don't get it.
let's shift to some of the names that you do like, aside from Meta and Alphabet, maybe Microsoft. You recently upgraded several AI infrastructure names to buy after the sell-off.
Yeah.
What stocks are you talking about, and what is Wall Street getting wrong?
Yeah. So I took advantage of this correction that you asked me about at the top of the show to go from hold to buy on a number of neo clouds and AI colo companies. These are the folks that are building the data centers for the hyperscalers and others. Some of them, when I initiated coverage, I went against the grain and had them in holds. I got a lot of heat because I wasn't buy like everybody else, but they've come in recently. So think of companies like CoreWeave, CRWV, IREN, IREN, Nebius, NBIS. These are the major neoclouds. And then you have companies that are AI colos, and these are companies that years ago built data centers to do Bitcoin mining, whether it was their own Bitcoin mining or hosting for somebody else. Now, as that business has plunged, they're all transitioning their capacity to support AI workloads, and there's a nice opportunity there. I'd say among that coverage list, my favorite is Applied Digital, APLD. I also very, very much like Flextronics, FLEX. This is a company that's a contract manufacturer that's been around, believe it or not, since 1969. But they're spinning off in the first quarter of calendar 27 their AI infrastructure business, and that will be a very exciting business indeed. In the meantime, Flex has come way down in price. I'm really bullish on that one. And, the street typically follows momentum, right? When stocks are going up, they raise their price target. They love to talk about it. When stocks are going down, they're nowhere to be found. But I usually play the other end of the trade.
Okay, so just in terms of timing, I was taking a look at these names. Some have pretty significant year-to-date gains already, but well off the highs. So it looks like most of them are well off the highs that I checked. So still a buying
Yeah.
opportunity today. Investors
Oh,
don't
yeah.
miss
Yeah.
out.
And a couple of them, like I would say my favorites right now, probably Flex, FLEX, Applied Digital, APLD, and CoreWeave, CRWV.
So as we think about AI infrastructure, why buy those names instead of just an Nvidia?
I like Nvidia too. I would buy Nvidia with both hands every time it got to about 190 to 195 share price. Um, I actually think that when you take a look at the revenue backlogs, now, when you have bookings, they're great, but I guess they could be, even though they say they're take or pay contracts, they always could be eliminated or even renegotiated. But these companies, these neoclouds and AI colos, have very cheap valuations. They have revenue backlogs that will cover them for years. And all these companies are going from lower margins to much, much higher margins as they build out. And I expect a inflection revenue-wise in these business. And I'm talking about most of these companies, their revenue tripling or quadrupling as we get out about 12 to 18 months from now. So I see a bigger pop in these names versus Nvidia. But man, again, as I said, if you can buy Nvidia 190 to 195, please do it.
You mentioned some of the names that you don't like, but as you think about some of the other AI winners that we've seen, which look too crowded or maybe too vulnerable right now?
Yeah, I think some of the same old that people have crowded into. Now, I felt that way a couple of weeks ago, but they've all come down significantly, even though they've rebounded late last week and then into this morning. But I would say some of these software names. Now, what we've seen recently is a rotation out of the hardware and semis. That's where I typically focus, and that's where I'm still bullish, into some of these software names. And no matter what these companies say in all their interviews, I'm not sure which software companies are just not disintermediated by AI. And so, in the meantime, as we have this rotation from hardware and semis into software, you bid up the software names. I don't know if that's the right thing to do.
Is there a software name that you think is safe, though?
Microsoft is interesting to me. Why? Not because I care that much about Office 365, but Microsoft Azure, their cloud business, benefits nicely from the AI boom. And they just showed a great quarter, some acceleration. And so if you have a software business like Microsoft, but you also have the benefit of the AI infrastructure building kicker that I've been talking about, I like that hedge.
So, as we bring it back to the question I posed at the intro, what's next for the AI trade? You would say more gains in store?
Yeah, I think so. We'll get AMD's print. There won't be much of a surprise there because AMD just had their AI Investor Day a week or so ago. So this is kind of a fait accompli. But I think you'll see as we get through earnings season that this major correction, and when I say major correction, some of these AI infrastructure builders went down 30, 40%. Once people feel better, as I do, that AI infrastructure CapEx will continue not just into 2027, but into 2028. I think the next move would be these stocks to continue their rallies.
Is there a data point or an earnings miss that would tell you that the AI thesis is actually weakening?
What I'd be looking for, and I think we're in the clear because most of the heavy spenders on AI infrastructure, the hyperscalers, have reported at this point. But when you have companies lowering their guidance for capital expenditures, that would be a problem. Because even if they lower it from 60% growth to still really vibrant growth, 30, 40%, people will see through and what we call the second derivative argument. And then they'll start to say, oh my goodness, we got to get out before that growth doesn't go from growth, but it goes to shrinkage. And so I think that would be what I'm looking for when these major hyperscalers start to rein in their CapEx. But I
So
don't
to
see
end it on
that
a
until we potentially get out to 2029, believe it or not.
Okay, all right. So it could be a few more years of bullish activity, but let's make it
Right?
practical to wrap it up. If I'm a retail investor with a portfolio full of Mag 7 stocks or maybe even just an S&P 500 index fund, what should I be doing today?
So today, I would continue to buy within the Mag 7, some of the leaders that have come down in price. I have highlighted Google and Amazon. And please, as a retail investor, don't be short-term oriented, but be long-term oriented. And Meta will indeed monetize AI at some point. No company has ever monetized stuff like they do. I would buy Meta and be a contrarian investor and take advantage. Then, even though they're smaller caps and are not within the Mag 7, look for continued rallies in some of these AI infrastructure builders. And again, there I've highlighted CoreWeave, Flextronics, Applied Digital.
Okay, I think this is a great time to pivot to our rapid fire game of this or that. It's your first time playing, so it's quick questions, quick answers, no hedging. Are you ready, Paul?
Yes.
Here we go. Tech bottom, in or still coming?
In.
Bigger mistake, buying tech too early or waiting too long to get back in?
Waiting too long to get back in at this point.
Hyperscalers or chip makers?
Chip makers.
Semiconductors or software?
Definitely semiconductors.
Nvidia or AMD?
Nvidia. 190,
Nvidia
195 buy limit.
Nvidia or TSMC?
Nvidia.
Palantir or Cloudflare ahead of earnings?
Palantir.
SpaceX after earnings, higher or lower?
Higher. Not that I like it, but I think Musk will give a little boost to the shares.
So SpaceX here, buy or avoid?
Avoid.
Micron or Western Digital?
Micron.
Nebius or CoreWeave?
CoreWeave.
Apple more than 10% off the highs, opportunity or trap?
Trap.
Apple or Netflix?
Netflix.
OpenAI's IPO, overhyped or underhyped?
Overhyped and delayed into 2027.
Same with Anthropic?
Anthropic will probably go public in the fall. I'm much a bigger fan of Anthropic than OpenAI.
Name a stock that's still a great company, but no longer a good investment.
ServiceNow. I'm worried about software. In enterprise resource planning software, I think ServiceNow has always been the best. But Caroline, as I told you before, I wouldn't chase them because I don't know how much they will really be disintermediated by AI in the end.
What's a tech stock you think will surprise investors over the next year?
I would go with Flex. Trading now at 114. I think it goes to 140, 150 easy, particularly in the fall. They will have a meeting to talk about the spin of their AI infrastructure business, which will be super exciting, into a separate public company. That'll happen, Caroline, in the first quarter of calendar 27.
Your highest conviction name for the rest of 2026?
Probably CoreWeave.
And describe this market in one word.
Heart attack.
Paul Meeks, managing director. We will ignore the space there. Paul Meeks, managing director, head of technology research, Freedom Capital Markets. We'll put that hyphen in there. Thanks so much. Really appreciate you playing along, and thank you so much for all of your picks.
Best wishes, Caroline.
If you enjoyed this Street Talk, check out our full interview with Phil Blancato. He says investors should use any pullback to buy quality stocks with both hands full of cash and gives his top picks.